The next speaker is Anka Yong. His name not here. Anka Yong, right? He's one of our youngest speaker. When he first came to OTCS, I thought he's looking for his father. I'm serious. Because I was marking attendance there, hey, 这个来请老辈 or what? So very funny. Very young one. Next time, ask him what age. Then he got eligible daughter or what can introduce. Huh? Oh, taken already. Sorry. Okay, so I am not going to take up more time. So I'll hand over the stage to Mr. Anka Yong. Okay, so take it away.
Alright, so for today, thanks everyone for being here, right? Today I'll be talking mainly on FX market, but not so much in terms of technical analysis, but more towards fundamental and sentiment. And we'll be looking at not exactly the next half of 2016, because in terms of FX, the market moved very quickly. But what we'll do is we'll look into next week or even into August, alright? Of course, other than August, it's very hard for me to even give you any of my insights itself. So I'm actually giving you up to August itself. But before I go into it, I would like to share a little bit about myself for those who are not very familiar who I am. And again, this page is to share with you guys that everything that we share today is really for educational purpose. If you follow our insights and you make money, it's good for you. But if you follow our insights and lose money, don't come back to find me or even OTCS. Right? It's your money to keep, it's your money to lose. Right? So again, everything we share is our own personal opinion. Okay. A little bit about myself. I'm currently trading and head of trading department of Alpha Play, our company, as well as coaching people who are interested to learn. Together with my partner, we co-founded this program called 4 Pillars. So I will share with you a little bit of what is 4 Pillars, which encompass fundamental and sentiment analysis. Alright, a little bit about myself. If you want to add me on Facebook, you can do that. On YouTube, if you want to search out for more weekly analysis, as well as, if you want educational video, you can do that as well. Alright, a quick one about Alpha Play. Alright, Alpha Play, basically, we believe in three... First one.
Can we switch out the light?
They need the lights off. You need the link, is it? Oops. Oh, good. Okay. Actually, if you guys want, we can PDF the slides and then I think through OTCS or what, we can actually share with you guys. So, anyway, a little bit about Alpha Play, right? In Alpha Play, basically, we believe in 3 simple things. Imparting simple strategies that is profitable to not only adults but also in students as low as tertiary education, poly, and even JCs. Alright, and we believe in building cohesive community, which I think OTCS is doing a very good job, alright, gathering everyone here. And the whole idea is to have fun in the financial market, alright, not really that kind of seriousness in we see in prop firm and such. The last part is we believe in practicing what we preach, right? So everything that I share with you today is really what we do on our own as well, alright, in terms of the fundamental and sentiment aspect. Okay, so this is what we term by 4 pillars trading. But today we'll be only focusing on these two, alright, fundamental and sentiment. We really don't have much time to cover the other 2 aspects, even if you want to, alright. In 30 minutes we can't really do much. So I will go walk through all this pretty quickly, then we jump into market analysis. But I want you to understand the role of fundamentals so you appreciate what I'm going to share with you for the next 1 to 2 months as well. Alright, so the role of fundamental here is basically to have a better understanding of currency market. To know what's the underlying forces that drive the currency, whether it's going up or going down. Some of the other speakers actually mentioned a little bit already, alright, in terms of like inflation, interest rate, how these forces actually drive currencies. And to empower traders with proper expectation in terms of the market itself, right? Whether you want to go in right now or not. And the last part, which we use a lot, is to actually build confidence and conviction in whether you want to buy a certain currency or you want to sell a certain currency. Right? So this is the role of fundamental. The role of sentiment is basically to understand what is the market risk environment. Alright, I think this one ties in with the 4 quadrant that you see just now, but it's slightly different in terms of currency market because we use the term risk on and risk off. Alright, so it's also tying in with safe haven, whether you want to go into commodities, go into bonds, or even going into higher risk yield currencies, alright, like Aussie and Kiwi, etc. Alright, so this one, sentiment rise, we talk about risk on, risk off. We also look into certain reports in the futures market to understand the flow of various currencies in terms of hedge funds, institutions, how they position themselves in the futures currency market. Alright, and most important is talking about the relationship between various market. That means you look at commodities and how it ties into currency market. You look at equities, how it ties into currency market as well. Alright, so let's jump into fundamental aspect first. So this is actually the table that deals with fundamental data only. And this is on a weekly basis, but we actually show you monthly and quarterly as well. So this gives you a rough outlook as well as historically, how has the fundamental data of each specific country performed. Alright, so this is a very mechanical and quantitative kind of methodology to crunch out the numbers in terms of how the fundamental of a currency is performing. And all these numbers are actually taken from, the Forex Factory. You have the calendar segment, Forex Street, you have those events, news data that's coming out. Basically, we extract all of this data, we plot it into Excel modeling, and then we're able to come out with all this. Alright, so to explain a little bit, over here, the verdict, if it's a negative or if it's red in color, it simply means that overall the economy is actually in contraction. Alright, and if it's green, overall it's basically in expansion. And this is actually based on the past 6 years. Alright, so we actually went back all the way 6 years to extract all this information. But more importantly, it's actually not on top, but what I want to share with you is over here on weekly, monthly and quarterly change. Alright, so basically what we are looking out in terms of for this week and moving forward, okay, we can see that Aussie itself for the past quarter has been improving in terms of fundamental quantitative data. Alright, Aussie, Kiwi, Canadian, even China has been expanding. Alright, Japan itself, the economy hasn't been performing. This one is based on fundamental economic data. US has been improving, Euro as well, alright, as well as pound. Right, but this gives you a quick understanding of whether economy is in expansion or is it in contraction. Alright, so this is purely based on numbers. Alright, so it doesn't take into account the sentiment aspect of currency yet.
This is past data or the forward?
This is past data, but in terms of how we use it is that we believe that if let's say monthly, the past 30 days is in positive, moving forward, it's going to give you an expectation on whether the central bank is going to do certain things, whether is it going to increase interest rate or cut interest rate, etc. Alright, so I'm going to connect certain dots later on as we follow through the analysis itself. Alright, the next part that we look into is something called COT, which is Commitments of Traders Report. This one we look into the sentiment analysis aspect. Alright, so this is a futures contracts. Basically what we want to see is overall whether the net position is in negative positions or positive position. Alright, very briefly, positive means overall there are more buyers than sellers. If it's negative, means it's more sellers than buyers. Alright, and what you want to see is the index here. Basically, it's that we craft it into an index. 0 means the lowest, 100 is the highest. If it's in between, means there's actually room for it to go higher or below. Alright, and if you look at pound, alright, it's in negative overall, but the index itself is tracking at 5, meaning it's almost at all-time low already. This index is tracking for the past 3 years. You can see that where this position is, it's almost the lowest for the past 3 years. Okay, so what it means is that is there still room for pound to drop further? Yes, but the chances of it might not be as high as, let's say, if you are trading on euro itself. Alright, there are more room for it to drop comparing in terms of the past 3 years. Alright, but I want you to take note of euro overall is negative, pound overall is negative. We look at the other 3 currencies. Alright, Japan positive, Aussie positive, and Kiwi positive. Alright, just take note of all this together with the index over here. Alright, then later on I'll combine all this analysis together to explain to you the outlook that we have. In terms of fundamental and sentiment, of course very important if you are trading currency is you need to look at what the central banks are doing. Basically there are 2 kinds of very common tool sets the central bank can use. One is increase or decrease interest rate. The other one is called quantitative easing. That means whether they will go and print more money and such. So I take out the most recent 3 banks. One is Bank of Canadian. Alright, so basically what we do as fundamental analysis is we need to read through the monetary policy statement that they release, and then we identify whether the banks, the central banks, are they hawkish or are they dovish. Alright, hawkish means they are very positive in terms of the outlook of the economy. Alright, when it's positive of the outlook of the economy, generally the currency will go and increase. But they are dovish, meaning they are negative towards the outlook of the economy, the currency will generally be bearish. Alright, so if we look at Canadian, I highlighted some of the key phrases. Overall, if you look at this, inflation of Canadian is on track, alright, in 2017, and the fundamentals remain in place for pickup of growth over projected horizon. Alright, so this is actually a very pretty hawkish statement, meaning they're actually positive towards the outlook of Canadian. Alright, and if you know, Canadian economy is also tying in very closely with US. Alright, so they also look at what the US economy is doing. So they also say the US economy is showing signs of rebound and healthy labor market and solid consumption growth. Alright, again, it's a hawkish statement. And the last part over here, domestically, they are saying consumer spending will also give a boost to from the Canadian child benefit. So they actually release something in terms of helping, and it might potentially boost consumption. Alright, so all these are hawkish statement. The next page of Canadian Central Bank Analysis is over here. Alright, again, they are talking about US being supported in terms of monetary conditions, how it's going to help the US economy. Alright, so this is again a hawkish statement, followed by the last one over here. They say that banks project that inflation will average close to 2% throughout 2017. Their inflation, BOC Central Bank's inflation target is actually 2%. So if they actually reach close to 2%, what they're going to do is they're going to start thinking if they want to increase interest rate to actually curb hyperinflation. That means they don't want to overheat the economy. So once they start to do that, meaning increase interest rate, a lot of money with capital will actually flow into Canadian dollar itself. Alright, and then naturally your Canadian dollar will strengthen. So that's why it's important to understand what is the central bank's outlook towards the future as well. Alright, so we know BOC is actually hawkish. Alright, the other bank that we look into is definitely your BOE, alright, which is very closely correlated to the current news about Brexit itself. Alright, so this term report is slightly very different because they actually take into account Brexit as well. And the few key points that are highlighted that is very important in this statement, in this monetary policy statement, is that in the absence of further worsening in the trade-off between supporting growth and returning inflation to target, they believe that monetary policy to be loosened in August. Alright, this statement simply means that in the August period, when they meet again, they might really consider QE, meaning printing money and releasing money into the UK economy itself. Alright, and you guys know if QE happens, the value of your currency will actually drop. Alright, so that will weaken your pound. Following over here as well, they say that markets have functioned well. This one is actually slightly hawkish statement, meaning they say that even though with all this financial uncertainty, the UK economy is actually well supported. Alright, so this is actually a statement to actually balance off a very dovish kind of statement on top. Alright, but if you go into the second page over here, they say that early indication from survey from contracts of bank agents suggest that businesses is beginning to delay investment project. So it's actually not good for economy. Alright, and then further is housing market surveys points to a significant weakening in the recruitment decision expected activity. Alright, so weakening in housing market as well. So they actually concluded and taken together, this indicator suggests that economic activity is going to weaken in the near term. Alright, so all this suggests that high chance that they need to do something to stimulate back the economy. Alright, last part over here. Alright, they say that to the end, most members of the committee expect monetary policy to loosen in August. Alright, so high chance that if they meet in August, there's a very high probability that they are going to start to do QE. Whether they're going to further cut their interest rate, that's another topic. Alright, but minimally, we expect that BOE is going to QE. Alright, and with that, we might see another drop in pound itself. Alright, the next two banks, very quickly to bring you through, is RBA and RBNZ. Alright, interesting part about RBA over here is that when they meet in July, alright, the interest rate didn't cut their interest rate. Alright, but there's a statement that says that the rising of Aussie dollar will actually complicate their whole economy itself, which means they do not favor a very strong Aussie. And when Aussie, as you know, if you follow the currency market, Aussie and Kiwi has been rising after Brexit has recovered, alright? So with a strong and expensive Aussie, this is not something that they want. So they'll do something to actually bring back the price of Aussie and Kiwi itself. Alright, so this statement, this report summarized it is that high chance that when the next time they meet, they will consider cutting interest rate. Alright, similarly for RBNZ, alright, the reason why RBNZ last time didn't cut its interest rate is because of housing concern. Alright, but right now they actually implement another kind of like rules, alright, to say that it makes it difficult for people to actually loan to buy house. Alright, and with this implementation, they can then start to consider cutting interest rates. Right, so all these two things again point towards a potential rate cut for RBA and RBNZ in the coming meetings. Okay, so I'll walk you through what is the focus of all these dates coming in July as well as August. The first one over here is Aussie CPI. Alright, this is on 27 July, which is next week. It's very important because CPI tracks inflation. If this data comes in missing, alright, it's again very negative. It's not positive. High chance the next meeting for RBA, they will cut rate. Right, the next meeting is actually 2nd August below over here. Alright, but before that, on the 29th, the same week, alright, Friday, you have a monetary policy statement from Japan. Alright, again, I think Margaret mentioned right at the start of today's sharing session that high chance that BOJ might do something to intervene in the market as well. Alright, but this one, to us, it's very difficult to analyze what RBA will do. Alright, most of the time, they're just gonna drop some random sudden bomb. Alright, even timing wise, they like to put tentative until suddenly you see it's released already. Alright, so it's very difficult to actually trade this. But from here to here, you actually give you a very nice clue. Meaning if CPI for Aussie here is negative, meaning it's not good for Aussie, high chance that this RBA rate statement, they're gonna cut their interest rate. Right, so as a trader, you can actually take the opportunity between here to here and see if there's any shorting opportunities to short Aussie. Alright, the next one is actually on 4th of August. Alright, that's where the BOE is going to meet again. This is again another focus that you need to keep in mind on because high chance they're going to QE, but whether they're going to cut further in terms of their interest rate. Alright, and Thursday itself on 11 August, this is the same week, it's where RBNZ is going to meet. Alright, the whole idea here is New Zealand and Aussie, they are very closely correlated. So if let's say 2nd of August, RBA cut rate, very high chance that RBNZ will also cut rate. Alright, they are pretty closely tagged. That means when one bank cut their interest rate, the other one, high chance they will follow suit. Alright, so these are some of the dates to focus on. Again, I didn't go beyond August because currency markets move pretty much and you need to keep in line with what's happening pretty recently. So I can't share with you my insights more than August itself. Alright, and I'm more of a medium-term kind of trader, so I don't really look beyond that. But just to share with you some potential technical-wise, alright, this is Aussie futures. Alright, currently it's trading at the support level. Alright, but this is on a daily time frame. So again, in line with CPI and potential cut rate, this is actually the two levels that you want to look out for. Alright, it's actually not huge. The difference between this lowest level to where current price is actually just about 200 pips. Alright, and if there's a rate cut, alright, this level is going to break. So as a trader, you can decide, where you want to search for opportunities to short Aussie should CPI comes in negative and RBA cuts its rate. Alright, next one that we are looking at is Canadian. Alright, this is Canadian futures. You can see that it's currently in a consolidation area. Alright, our outlook towards Canadian is actually bullish because of the central bank statement is hawkish, economy is actually improving. And if you put it into context of what's happening in the 8 major current countries itself, alright, a lot of them are talking about easing, a lot of them are talking about cutting interest rate. The only two central banks that is slightly more hawkish or bullish is actually BOC and Fed itself. Alright, all other countries are facing a lot of decision on whether they want to cut rate and such. So again, we believe that when money flow away from one currency, it will flow into another currency. So there's actually potential for us to actually buy into Canadian dollar. Alright, so this is again a very simple technical outlook. If it's currently consolidating, alright, if it breaks upward, just some minor resistance and over here a major resistance. As long as it breaks, there will be even more potential for it to go higher. Alright, the other one is pound. Alright, again, this is Brexit. Now it's currently ranging in a very wide range. All right, the lowest here is about 1.29. The high here is about 3.5. So it's a very wide range. But we do expect that when BOE meets, all right, when they do QE and then they decide to cut rate, this level will break and it might go even further lower. All right. We, for our own personal opinion, is that this upside will most likely be contained. That means even if they don't cut interest rate, highly unlikely it's going to go back higher. All right, because of the whole statement that the BOE has been released. The next one is actually looking at yen. All right, so you can see yen actually strengthened a lot, which is not something that the Bank of Japan wants. All right, because a strong yen actually hurts their export. All right, and it will dampen their economy. So what they want is they actually want a weak yen. All right, and this drop itself is when Abe actually released that they might potentially stimulate the economy with certain packages and such. But they haven't made any clear decisions yet. But you can see how market has already started pricing in that. All right, so again, if they decide not to do anything, yen might just shoot back up all again. All right, but of course, if they really do something, there's a potential that yen can fall further. All right, this level over here is about this is in terms of yen dollar. All right, because it's a futures chart. This is a very strong support. All right, so in terms of what they're gonna do, is this support gonna being supported or is it gonna be broken? That's something that if you are doing technical analysis, you need to look out for. All right, but just giving you some insights into some levels that you can look up. All right, any questions for me? We have a little bit more time now, about 10 minutes. Okay, I need to go through quite fast because of time constraint. So yeah.
When you just now talking about the fundamentals,
Yep.
which economic indicator are you using? Is it
Oh.
GDP or any?
G. Oh, okay. She actually asked a question as to just now that table, all right, which economic indicators do we take in? We actually take in everything that you can find on FX Street, which includes your inflation data, employment data, PMI, CPI, and all those things. So GDP is one of them as well. Yeah, but how we do it is we then put it into a weightage system, meaning, for example, if you look at US now, of course, some data is more important than the others. For example, your NFP is definitely more important than, let's say, your every week unemployment claims. All right, so NFP will have a higher weightage. But then if you follow through US economy itself, you know now it's full employment, and unemployment rate is 4.9, so it's actually under full employment. Their shift is now towards inflation. All right, so then now the data that's more important is actually average hourly earnings. Then we'll actually be focusing more on average hourly earnings compared to unemployment kind of data. Yep. Okay, if not, right, I can't really walk through a lot for today, but let me share with you two sessions or 2 extra workshops that we have if you are interested. We have one workshop that talks about fundamental and sentiment analysis. I think some of you who are here might have went through that already. And together with Chiu, we actually cut this down for all OTCS members to just $47. Alright, so for those who haven't had the opportunity to attend, if you're interested, can look for JT behind to actually find out more about it. The other one is technical analysis. This will be on 6th of August. Again, this is a market rate, so maybe with Chiu, we can actually work on the pricing then to cut down for all members over here as well. Right, technical analysis, we just talk about purely technical, meaning the technical analysis that we use. Right, so these 2 workshops will be very clearly separated: fundamental, sentiment, and technical alone. All right, so with that, that's all that I have to share with you in terms of our outlook. All right, yeah.
Okay, thank you. Thank you, Kayong. 年轻有为。